I don't know anybody personally who would buy this. If you're out there, I'm really very curious to see who you are. So presents one of the largest quantum advantage that I've seen in recent years. And this leads me to the key takeaway that I wanted to share with you in this video, that right now presents a window. Hi everyone and welcome back to the channel. My name is William from Own This Property. In this video, we'll be using the opportunity to take stock of what has happened so far this year, as well as look forward to what is going to be a very exciting second half of 2025. This is the ultimate guide to new launches, second half of 2025 update. So how have new launches fared so far this year? There have been 9 notable new launches excluding boutiques, and top of the list are the Ori and Parktown, which are now over 90% sold. The first EC of this year, Orel of Tampines, has also already 100% sold out. From this table, we can see noticeable weakness in the CCR, particularly because Aurea, which is the Golden Mile redevelopment, has not sold a lot of units. On the other hand, One Marina Gardens have really surprised me. So far, it's already 47% sold to date. And then lastly, one thing of note is Bloomsbury Residences. Now this is in the RCR, and even though there's no MRTs and there's no schools within 1 km, it has also sold pretty well, 39% to date. And the price is the key reason. It averaged at about $2,400 per square feet, which is only slightly higher than your OCR Parktown and even lower than the OCR Alta at Tampines. With the slew of new launches since November till today having sold pretty well, you can actually see that the unsold inventory levels have started to decline. However, this probably will change because in the coming months, there will be a lot more new launches that will again boost up these unsold inventory levels. In terms of the regions, OCR remains the tightest, followed by RCR, and CCR is still stuck in a rut. If you take a look at the take-up rate, you will notice that it is pretty high at 7.6. This means that the unsold inventory in the market is still pretty large relative to the demand based on average annual sales. However, will this remain? Well, I think that the CCR is going to be a very interesting place to be in this year and going forward. However, we need to be very selective, and that is the key reason why I'm doing this video once again, to tell you what are the good buys and what are the bad buys in the market. So here's what we know of some of the upcoming launches this year. I've arranged this table based on who is going to be launching first. And if you take a look at some of the rankings, based on my initial ultimate guide to new launches, some of the rankings have actually changed as new information have come in. Now this video is not a super in-depth video to go into every single project because we just don't have the time, but this will serve as an overall look at what are good and bad properties coming up this year. I'll definitely be doing the more in-depth signature OTP framework analysis for some of these developments, probably LyndenWoods or Robertson Opus coming up. So if you want to check out my in-depth review of those condos, do subscribe to the channel, and you can also fill up the Google form link below so that you can receive the latest updates from me, or you can also contact me on WhatsApp and I'll be happy to send them to you. Before I dive in, I think that right now in the market presents a window of opportunity that's not seen since a long time. What do I mean by that? Stay tuned to the end of the video where I explain in greater detail what this means for you as a buyer. And here's a quick recap of how I'm going to actually analyze and rank some of these properties. We'll be looking at 4 key factors, which is your quality, your location, the upside potential, and exit strategy. I will be sharing with you what I like and don't like about all these developments. So let's start off first with the first launch coming up, and this is actually already started its preview phase as I'm recording this video. This is Arina East by ZACD. This is located just a few minutes away from Katong Park MRT. Arina East was supposed to launch in April this year, and they indicated that the prices would start from $3,000 per square feet. But we all know what happened in April, so they kind of pushed the launch a few months later to today, and they actually lowered the indicative price. Now prices are going to start from $2,800 per square feet. The development focuses more on own stay, which is appropriate based on its smaller size and the location. And what I really like is some of the layouts over here. I've shown you the 2 bedrooms. Now the 2 bedrooms, both the 1 bath and the 2 baths are all naturally ventilated kitchens and bathrooms. And if you take a look at the 3 bedroom as well, fairly standard and good layouts over here with a naturally ventilated kitchen. Hence, what I initially ranked as C at the beginning of the year gets an upgrade to B, and this is mainly because of its good layouts, but most importantly, the lower than expected starting from price of $2,800 per square feet. Now, this is probably going to average to about $3,000 per square feet on launch day, but that is still lower than the most recent launch in that area, Mayor Blue, which currently averages at $3,200 per square feet. Previews have already started, so if you are keen to check out this development, do reach out to me on WhatsApp, and I'll be happy to share with you more at the show flat. Sticking to District 15 is Amber House, which is a 105 unit redevelopment of Amber Glades by Far East. It is about 400 meters away from Tanjong Katong MRT. This launch is even more interesting because it was delayed for over 3 years. If you take a look at the article over here, which was released in 2021, the show model and everything was actually up already, but Far East decided to hold off the launch, and they actually redesigned and reconfigured the space and resubmitted the plans. So fast forward to today, they are now ready to launch, and because they submitted the plans later, now the floor plans are all based on the latest URA harmonization rules, meaning that the aircon ledges are excluded from the calculation. So far, we have some artist impressions over here, and if you take a look at the unit mix, I like it because there are no one bedrooms, and only 43% of them are 2 bedrooms. The rest 57% are your 3 and 4 bedrooms, and this is a good thing because it's clearly geared towards own stay profile buyers. Sharing some of the floor plans that we already have, and based on my estimates of about $3,200 per square feet, if you take a look at the left layout over here, the 2 bedroom, 2 bath, 635 square feet will be about $2 million. And then the 3 bedroom plus study, which is huge by the way, 1,200 plus square feet, will be about $3.9 million. Generally, these are pretty efficient layouts, quite common for some of the developments that Far East have been doing over the years. What I like about this development is, again, the developer's good track record and good layouts, but it is, however, a small development. Location-wise, Amber has always been a very popular area in District 15, but with Tanjong Katong MRT now up, it adds that connectivity that the area lacked for many years. In terms of long-term capital appreciation, of course, we have the Long Island transformation as well as the Bayshore transformation. However, that is still quite a few years away. So if you're ever to buy a property like this, do expect a longer holding period. Now, still, the exit strategy is very strong because this area and District 15 attracts a lot of local demand, a lot of organic demand, and upgraded demand. The GLS that we can kind of compare recently at the Bayshore MRT area, and that is a 99-year leasehold property, is already expected to sell at about $2,700 to $2,800 per square feet next year. So if you can actually enter Amber House at about $3,200-ish per square feet, I think that relatively that is the right and good price to pay. So with that, I rate Amber House a B rank. And moving on to the west side, this will be the first launch in Science Park in over 40 years. This is LyndenWoods, and this is a redevelopment by Capital Land, part of the Greater One North area, but the unique selling point is that it is the only condo that is within walking distance of Kent Ridge MRT. Now, previously, I was kind of concerned because there was only going to be about 345 units, and if you take a look at some of the one-off developments recently, there's a lack of facilities. But good news, the site plan is out, and you can see that there's going to be a full lap pool, there's going to be a tennis court, and even a pickleball court. Plus, it is also within 1 km of Fairfield Methodist, which is a positive. Another USP is that if you take a look at some of the perspectives on the left, south-facing units, as long as you go above the 10th plus floor, will get nice unblocked sea views. So some of the information is already out. We have the unit mix, and you can see that it is again geared more towards own stay. I have some floor plans already, and if you take a look at the left floor plan, the 2 plus study is 850 square feet. The study you can see is pretty huge, so this is more akin to like a 3-bedroom compact. And based on my estimates of $2,600 per square feet, it should average at about $2.2 million. And if you take a look at the 3 plus study, which is also huge, about 1,200 square feet, it will average at about $3.1 million. What I like is that study or guest room, you can actually hack down the wall to create an even larger master bedroom. So all positive over here. I think that LyndenWoods is one of my top picks for 2025. All in all, everything combined, you have your facilities, your 1 km to Fairfield, the good unit mix, and CapitaLand as your developer. Plus, you are the only development in the Cambridge MRT area. This development gets an A rank. Moving on to what is probably going to be the first CCR development to launch this year is Upperhouse at Orchard Boulevard. Now, this development is situated directly next to Orchard Boulevard MRT in this very upmarket area and is expected to preview around the 3rd or 4th week of June this year. One of the key USPs of the area is that the development will get nice views, especially if you find ones that are actually overlooking these unblocked landed views. But this is still going to be a luxury development. I don't have a lot of information to share with you yet. I only have this one artist impressions. This is going to be a 35 stories development. Not much has changed over here in my analysis, but I do notice that the developer has been touting that some of the fittings are going to be your luxury brands. They keep talking about some Italian brands like Caccaro and Rimadesio. I hope I pronounced that correctly. So when I hear something like this, probably when you have luxury fittings, you might expect a slightly higher price. This is probably not something that investors would like in a development. So based on some of the references in the area, Cascaden Reserve, which is the latest to TOP in the area that is also 99 years, is transacting at an average of about $3,000 per square feet. So I do expect that Upperhouse you will be priced at about 3.2 to 3.3k per square feet. Sticking to the CCR, and let's go even more upmarket, this is W Residences at Marina View. And by branded residences, we mean things like St. Regis Residences. And because of that, this is going to obviously cost a lot more. IOI will be the developer of this development. It will have about 683 units and it will be previewing really soon, end of this month, around 27th of June. This land plot is surprisingly in a very good location. If you take a look at some of the perspective over here, as well as the master plan that I included on the left, you will see that the development actually fronts a park. And this park land is huge. It's going to be redeveloped into this place called the Commons. It's going to be about 18 hectares of recreational communal spaces. So these park views will be unblocked forever. And that is again one of the key draws of this particular development, W Residences. No changes to my assessment over here. Because of its branded status, you can see what I like and don't like about this development. It remains a D rank. And based on what I hear on the ground, because of its luxury status, this development would probably be about $4,000 per square feet. Now, I don't know anybody personally who would buy this. If you're out there, I'm really very curious to see who you are. Next up, let's move on to the Robertson Quay area where we will have the redevelopment of Robertson Walk. This will be a triple 9-year development, which is very rare for that area, and it will be developed by Frasers and Sekisui. This development will have about 348 units and is expected to preview on the 4th of July. So far, I've already have the unit mix, and thank goodness this is a pretty good unit mix. Oftentimes in the CCR, in order for developers to attract more sales, they tend to build smaller units. The smaller contents will attract investors. But for this development, you'll notice that the smaller units only account for about 65% of the units over there. So unlike places like maybe One Marina Gardens or some of the developments that I'll share with you later with over 70% of small units, I think that this is a good unit mix if you were to be an investor over here. We already have some artist impressions over here, and if you take a look at some of these pictures, there will be a total of 26 commercial units spanning the first floor as well as basement 1. And probably will be similar to what it is today. You'll be expecting F&Bs and some shops. All the layouts are already out, but I just want to point out two common layouts that is good in my opinion. Over here, the 2-bedroom, 2-bath, which is 689 square feet, is pretty good because you have a naturally ventilated kitchen over here. And based on my estimate price of about $3,300 to $3,400 per square feet, this development will probably average at about $2.3 million for the 2-bed, 2-bath. And for the 3-bedroom flexi, this is another nice layout. The flexi room, you can actually knock down the wall in between to create an even larger living and dining area. And based on my estimates, it will probably average at about $3.3 million. In terms of my assessment, not much have actually changed for Robertson Opus, but one thing that I really like is the unit mix. So I've upgraded the rank from C+ to a B. Next, we'll be covering the second EC to launch this year. This is called Otto Place at Tengah, and preview will probably start around the 4th of July this year. Interestingly, this is the second EC in the same area developed by the same developers, Hoi Hub and Sunway. And because Novo Place is already about 98% sold today and an average of about $1,655 per square feet, I do expect that Otto Place will be slightly more expensive, closer to about $1,700 per square feet. We have some artist impressions over here, and what you would expect of any EC, of course, you get full condo facilities and a tennis court because there are 560 units. Now, one thing to note is that Novo Place is more north, so it's closer to Tengah Park MRT, whereas Otto Place would actually be closer to Bukit Batok West MRT. The south-facing units can actually overlook a very nice unblocked views, but it's also overlooking an expressway which is about 50 to 60 meters away, so do expect some noise from that. In terms of layouts, they are very good and efficient, very similar to Novo Place. This is a URA harmonization development, so 872 square feet, 3-bedroom. It packs a lot of efficiency into this small size, and based on my estimates of about $1,700 per square feet, it will probably sell at about on average $1.4 million for the 3-bedroom and about $1.7 million for the 1,012 square feet 4-bedrooms. Hence, all positives over here, and it reaffirms my ranking of Otto Place as an A+ development this year. Now, if you are looking for an EC in the west, I think that you should just go and get this because the upcoming West Side EC will be at Bukit Panjang along Senja Close, and it will only have about 205 units, so it's going to be a much smaller EC. And the Senja Close EC is also not close to an MRT. So Otto Place, in my opinion, definitely wins that. And of course, the price will probably be cheaper for Otto Place this year. Moving on to one of the most hyped areas in the new launch market in 2025, this is Zion Road. And the first to launch over there is Zion Road Parcel B, which is now known as Promenade Peak, developed by Allgreen. This will span about 596 units across a 63 stories block. And what I like about this plot the most is its equidistance to Great Wall MRT and Havelock MRT. And the north-facing units will also get views of the Singapore River. Not much information has been released about this plot yet, so I'll leave my assessment as an S rank or top rank property in 2025. If you wish to receive the latest information about this development, do reach out to me on WhatsApp, or you can also fill up the Google in the link below, and I'll be happy to reach out to you. And hot on the heels of Promenade Peak and in the same area will be the first plot in River Valley Green. This is River Valley Green Parcel A, which will now be known as River Green, and it is developed by Wing Tai. It will have about 524 units, and it is directly next to Great Wall MRT. We don't have a lot of information, but we have some already, and there are some artist impressions over here. You can see that on the bottom right hand corner, River Green is directly located next to Great Wall MRT. But bad news, I think, there's actually the unit mix already. And what I noticed is that there's a lot of 1 and 2 bedrooms. It will comprise 73% of the development. So while the unit mix is not very ideal, there is an even more crazy point that I would like to point out over here. Now, I've recently done the ultimate guide to River Valley properties. If you've not seen that video, you can click the link that I leave above or in the description below. I'll take you on an on-the-ground tour of the River Valley area. Now, in that video, I actually went on the ground to check out the Trillium and Cosmopolitan, which is directly next to River Green. And if you take a look at the prices over there, the 2-bedroom averages $3.7 million at the Trillium and $2.85 million at the Cosmopolitan. But if you take a look at River Green, the 2-bedroom plus study layout is only 650 square feet. So even if we go a pretty high PSF, like $3,000 per square feet, it is still going to be under $2 million on average. And if you take a look at 3 bedrooms, averages $4.75 million at Trillium and $3.75 million at the Cosmopolitan. Whereas on the other hand, River Green, the 872 square feet layout will only average at about $2.6 to $2.7 million. And what's even more crazy is the 4-bedroom units at 980 square feet. Now, this is a 4-bedroom, less than 1,000 square feet. 980 square feet. Again, assuming, even if you want to assume higher, $3,100 per square feet, it will still cost around $3 million for a 4-bedroom in River Valley, while the asking prices of the two other resale are now already at about $5 million. So River Green presents one of the largest quantum advantage that I've seen in recent years. Previously, I was kind of worried about the land plot because of its odd shape, but Wing Tai has done its magic. It will be a full facilities condo with a tennis court as well as a 50-meter lap pool. So the quantum advantage I've already covered previously. That's one of the key things I like. However, I can't ignore the fact that the unit mix is not very ideal, and that's a negative over here. So I've actually lowered my ranking from S to A for River Green. The River Valley area is definitely going to be a very exciting area this year. And the last to launch this year will probably be Zion Road Parcel A. No information about that so far, but it's going to preview around the 4th quarter of this year. And next year, we also have River Valley Green Parcel B. Now, this was won by Google Land. They were the top bid out of 5 bids, and it will also make River Valley Green Parcel B the most expensive land plot so far at $1,420 per square foot PPR. However, I'm really positive about this land plot. Firstly, because the developer Google Land, great track record, nice, good, efficient layout. But this land plot is special because you can see in the picture over here, it actually has a very wide frontage along Singapore River. So a lot of the units will get that nice river views, and you also have Kim Seng Park as a setback from that river. If you are keen to find out more and receive the latest updates of all these developments, just drop me a message on WhatsApp and I'll be happy to send them to you. Last but not the least, we have another development by Google Land partnering with TRID. This is Faber Residence at the West Coast area, and it is expected to launch around the 4th quarter of this year. This development will have 399 units. Since Faber Residence was not part of my initial ultimate guide to new launches, here's a deeper breakdown. Now, what I really like about this development is, again, the developer has a good track record, but more importantly, it is within 1 km of the very popular primary school Nanhua. And the resale transactions in the area is also very strong. The land bid of $900 per square foot PPR for an OCR development with such attributes, I think is also a very good price. Hopefully the developer will also launch it on the lower end. But most importantly is the exit strategy. Now, although we don't have an MRT, it has not stopped the resale developments over there from performing well. Whistler Grand, which is the newest to TOP in the area, already averages at about $1,900 per square feet. So I do expect Faber Residence to sell at about $2,100 per square feet, and that is a very fair price. After covering Faber Residence, we also have other launches coming up, but I just don't have a lot of information to share with you today. So I'll just look at this chart over here to share with you my estimated prices. Now, the first up is Canberra Crescent Residence. This will probably launch around 16th of August, and I expect prices to be about $2,000, $2,100 per square feet. I've shared in my previous video that if you are looking for a Canberra property, just go ahead and buy the resale because this development is not near an MRT, whereas all the other resale developments are much closer to Canberra MRT. Next, we also have Springleaf Residence. This is going to be pretty interesting for me. It will launch around August this year. And because we can actually reference Lentor Central Residences, which is one stop away, has averaged at about $2,200 per square feet. So we should be slightly cheaper, hopefully at $2,100 per square feet. And we also have the Sand. This is at D'Souza Avenue. This is not something that I'm again very keen on just because the resale performance in that area doesn't give me a lot of confidence. Lastly, one of my top picks for 2025 is the Margaret Drive GLS. Again, not much information so far. I've kept my ranking as an A+. The only thing I have for you today is the name, and it's going to be called Penrith. And based on what I'm thinking, the prices of the market today, it should be averaging at about $2,800 per square feet. Having covered most of the properties that I have new information about launching this year, this is a refresh overview of my ultimate guide to new launches rankings. The last one that I just wanted to point out again is my top pick based on the list, but I really don't have any information about it so far. I don't even have the name of the development, and that is Tampines Street 94. Based on what I sense on the ground right now, because of the lack of information, it probably might not even launch this year, maybe January 2026, but definitely keep it a shortlisted property that you as an investor should buy if you're looking for east side properties. If you wish to receive the full and in-depth ultimate guide to new launches 2025, do fill up the Google form in the link below or reach out to me on WhatsApp and I'll be happy to send it to you. Having seen some of the launches that are coming up this year, let's take a step back and actually review the market and whether this is a right time to buy. First, let's take a look at the private property market. Looking at the PPI index, the first quarter of 2025, the index actually grew by 0.8%, and this was after a very strong fourth quarter 2024 where the PPI grew by 2.3%. Now, I want to always remind my buyers that dips are inevitable. Nothing goes up in a straight line. And if you take a look at the data over the past few quarters, I think that the property market is still very resilient, and it's all thanks to the cooling measures that have been implemented over the years. If you take a look at the prices across the board, not only the landed properties but also the non-landed properties have returned fairly good growth. But surprisingly over here, if you take a look, the CCR is actually not the worst performing region in the first quarter. It is actually in fact the OCR, which only grew by 0.3%. And something that I've mentioned multiple times is that the underlying driver of our private property market is still HDB. And the HDB resale prices have been again very resilient. In the first quarter of 2025, prices rose by 1.6%. The first quarter of 2025 have also seen a record number of $1 million HDB flats transacted. There are a total of 348 $1 million HDBs. So what a whirlwind of a 2025 it has been. And I think that right now it's kind of that battle in the buyer's mind of uncertainty versus certainty. And if anything I would learn over my 7 years in real estate is that nothing is constant. The only constant is change. And definitely every year, every quarter, there's going to be more uncertainty, more bad news popping up. But more importantly is how we actually look at the data and how we react after hearing such news. And in this year and the current cycle, a large part of the uncertainty has been external, largely stemming from the trade wars. Now, this has created a lot of fear and uncertainty, and even the governments of countries worldwide have also taken a step back, lowered their growth forecast, and again, that has trickled down into buyer sentiment being very poor right now. Hence, we always want to fall back on the underlying fundamentals. And what I can say with a lot of certainty is that Singapore's property market, the private property market, is very strong fundamentally. And this is because, I've shared again in the previous slides, the HDB market is very resilient. You have very healthy household balance sheets. And right now, the market is also presenting a good opportunity because of low interest rates. But ultimately, the Singapore private property market has very strong local demand and very low speculation. And while 2025 was off to a very bad start, I think by now the dust has kind of already settled. Based on NTI's latest forecast, they have maintained the GDP growth numbers to be 0 to 2%, and the first quarter GDP numbers have actually been very good at 3.9%. And this leads me to the key takeaway that I wanted to share with you in this video, that right now presents a window of opportunity for you as a buyer. If you take a look at this screenshot over here, this is on the 3rd of June as of this recording. Mortgage rates in Singapore, the fixed rates have fallen to as low as 2.15%. What do I mean by that window of opportunity? Well, if you take a look at the timeline over here, November was a slew of launches, that mega blockbusters that trickled all the way until the first quarter of this year. This was when buyers were very exuberant and they started entering the market, pushing prices higher and establishing new benchmark prices. But of course, April came and Liberation Day tariffs impacted buyers and developers' sentiments. Some of the developers have also pushed back some of their launches that were supposed to happen in April and May this year. So what is happening right now as we are entering June? Sentiment is still very low. Buyers are on the sidelines. And it's exactly in such moments this window of opportunity presents itself, but only if you are willing to take action. You can see that there are over 12 launches coming up from now all the way until the end of the year. And this is the environment that we want, right? We are swinging towards a buyer's market. Developers are fighting one another, they are competing with one another, and this is when prices are going to be reasonable. Eventually, things will revert back to its fundamentals, and we now know already that the Singapore private property market is fundamentally strong. As buyer sentiment improves, they will start entering the market, and I do foresee that happening towards the end of this year. Already, we are starting to see signs of that as the macroeconomic environment improves. So if you are a buyer, be it looking for own stay or investment, and you wish to gain clarity on your decision-making process, you wish to have someone who gives you an objective view on what is a good investment to buy and what is a bad property you should avoid, do reach out to me on WhatsApp or fill up the Google form in the link below, and I'll be happy to share with you a customized property consultation plan. And with that, we've come to the end of the video. Thank you for staying till the end. Don't forget to like the video, subscribe to the channel, and I'll see you in the next video.